The crypto market is quiet again, but this is not the kind of quiet that means nothing is happening. This is the kind of silence that appears after positioning and before major movement. For the second time in recent market cycles, crypto has entered a phase where headlines disappear, prices compress, and public attention fades. And historically, this is where the next trend is born. Bitcoin is not crashing. It is not rallying either. It is stabilizing. And in crypto, stabilization is never accidental. When volatility drops, weak hands leave the market. Short-term traders lose interest. Noise fades, but institutions do not leave. They stay. They rebalance. They quietly prepare. This is the phase retail traders misunderstand the most. They assume opportunity is gone. In reality, opportunity is being built. Ethereum continues to evolve quietly. Layer 2 networks expand, transaction efficiency improves. Institutional infrastructure grows stronger. None of this creates hype, but all of it creates foundation, and markets move on foundations, not headlines. Altcoins look lifeless to most observers. Volume is down. Social media engagement is low, but this is exactly how accumulation phases look. Capital does not chase excitement here. It waits. It selects. It positions silently. Macro conditions are adding pressure beneath the surface. Interest rates remain restrictive. Liquidity is selective. Global risk appetite is cautious. In environments like this, crypto does not explode immediately. It compresses, and compression always resolves. Crypto has never rewarded impatience. It has always rewarded preparation. This phase is not designed to excite you. It is designed to test you. Those who leave now usually return later at higher prices. Those who stay informed, calm, and strategic are the ones who benefit when volatility returns. And volatility always returns. The market is not asleep. It is holding its breath. While the market looks slow on the surface, capital is quietly rotating underneath. Smart money does not chase pumps. It studies behavior. And right now, behavior shows patience. On-chain data reveals something important. Long-term holders are not selling. Wallets that, historically by near bottoms, are increasing their positions again. This is not emotional buy-in. This is calculated. When supply tightens and demand stays silent, price does not move immediately. It waits. Bitcoin dominance remains strong, but not aggressive. This suggests a market imbalance, not fear. Stablecoins are flowing back onto exchanges slowly, which often signals preparation, not panic. And preparation always precedes volatility. Regulators continue to send mixed signals. Some headlines create fear. Others create clarity. But markets no longer react emotionally to regulation. They adapt. Each cycle, crypto becomes harder to kill and easier to integrate. This is why institutional interest never fully disappears anymore. Large players are not looking for hype. They are looking for structure. Custody solutions improve. Compliance frameworks mature. Infrastructure strengthens. These are not retail signals. They are long-term signals. Meanwhile, retail traders feel bored. And boredom is dangerous in crypto. Bored traders leave. Patient investors stay. Every major rally in crypto history started with boredom, not excitement. When everyone is watching, the move is usually already over. When no one is paying attention, the setup is forming. This market phase is separating spectators from participants. Spectators wait for confirmation. Participants position before confirmation exists. Crypto does not move when it feels safe. It moves when it feels uncomfortable. And right now, comfort is disappearing slowly. Not through fear, but through silence. The next trend will not announce itself. It will simply begin. And by the time it becomes obvious, the opportunity will already be gone. Silence in the market is never empty. It is filled with positioning. Behind the charts, data continues to speak. Hash rate remains strong, showing miner confidence has not broken. This means the network itself is not under stress. When miners stay active, they expect higher prices ahead. At the same time, exchange reserves keep declining. Coins are leaving exchanges. moving into cold storage. This is not trader behavior. This is investor behavior. Less supply on exchanges means one thing. When demand returns, price moves faster than expected. Fear and greed indexes sit in neutral zones, which historically act as launch pads, not ceilings. Extreme fear creates bottoms. Extreme greed creates tops. Neutrality creates surprises. Altcoins appear weak on the surface, but weakness, after long consolidation, is often compression, and compression always ends with expansion. Narratives are also shifting. The market is no longer obsessed with memes alone. Attention is slowly rotating back to utility, scalability, and real-world integration. Layer 2's solutions, tokenized assets, and decentralized infrastructure are quietly gaining traction. These are not trending on social media yet. And that is exactly why they matter. Smart capital moves before narratives go viral, not after. Another key signal is liquidity. Global liquidity conditions are slowly loosening. Whenever liquidity increases, risk assets respond first. Crypto does not wait for permission, it reacts instantly. This is why crypto often moves before stocks, before headlines, before analysts update their models. Those waiting for certainty will miss the move, because certainty only appears after price has already moved. The next cycle will not look like the last one, it never does, but the psychology remains the same. Disbelief, doubt, silence, then acceleration. The market is not asking if crypto will move again. It is deciding who will still be paying attention when it does, and that decision is happening right now. History does not repeat, but it always rhymes. Every major crypto cycle begins the same way, quietly. No celebrations, no hype, just accumulation in the shadows. This is the phase where headlines lose interest, volumes dry up, and most viewers stop watching. But this is where foundations are built. On-chain data shows long-term holders increasing positions. Wallets that haven't moved in years are becoming active again, not to sell, but to consolidate. Meanwhile, institutions are not rushing. They never do. They scale in slowly, patiently, knowing liquidity is thin, and panic creates opportunity. Retail waits for confirmation. Smart money creates it. Regulatory pressure dominates the news cycle, but markets have already priced fear in. What remains unpriced is adaptation. Every regulation forces innovation. Every restriction creates a workaround. This is how crypto evolves. The strongest projects do not fight the system. They integrate with it. Payments, settlement layers, digital identity, tokenized real-world assets. These are not theories anymore. They're being built while attention is elsewhere. And while social media argues over price predictions, developers ship updates. Markets reward builders, not noise. Volatility feels dangerous, but volatility is oxygen. Without it, nothing grows. The greatest risk in this phase is not losing money. It is being absent when momentum returns. Because when it does, there will be no warning, no countdown, no second chance. Price will move, narratives will follow, and attention will chase performance. And those who stayed patient will look like visionaries, while those who waited for certainty will call it luck. This is not the end of the story. This is the calm before acceleration. What comes next is never announced. Markets do not ring bells at turning points. They move when belief is at its weakest. Right now, confidence is fragile. That is not a warning sign. That is a signal. Every cycle transfers wealth from the impatient to the disciplined, from those chasing candles to those building positions in silence. This phase is not about excitement. It is about alignment. Aligning with time, with data, with probability. Short-term noise will continue. Fake rallies, sharp pullbacks, emotional traps. They are designed to shake conviction. But the long-term trend is shaped elsewhere by adoption curves, infrastructure, and capital flow. Crypto is no longer an experiment. It is a parallel financial system forming in real time. Slowly, then suddenly. When momentum returns, it will feel obvious in hindsight. People will say it was clear. The signs were there, But clarity only exists after price confirms it. The real opportunity lives before confirmation. This is where decisions matter. Not based on hype, not based on fear, but based on understanding how cycles work and where we stand inside one. The next wave will not reward speed. It will reward patience. And those who stayed present during the quiet will not need luck when the noise returns, because they were already positioned before the world started watching. This is not financial advice. This is market reality, and the story is far from over.